Hi, and welcome to Market Conversations. Today is March 24th, and just want to do a quick video on First Republic Bank. We are down 1%, but it is still up from its low of hit 1152. This was March 20th. So far, we are above that, which is a good sign. But anything can happen over the weekend, as we have seen in the past 3 weeks. The stock was once $100 stock, so it's dropped quite a bit. If we take a look at some of the news here, we can see this article came out today, 11:17 a.m. It says First Republic Bank founder earned a big pay, as did his family members. So, First Republic Bank paid family members of its founder, James Herbert, millions of dollars for work at the lender in recent years, including for consulting services related to interest rates and risk. The bank paid Mr. Herbert, who was chief executive before stepping into the executive chairman role last year, $17.8 million. So if you take a look down here, it says First Republic, which was the country's 14th largest bank measured by assets at the end of 2022, has been at the center of contagion fears in the U.S. banking system, with its stock down over 90% in the past 3 weeks. It's known for catering to wealthy individuals. The bank has raced to stem a rush of depositors pulling funds amid concerns that First Republic has some similarities to now-failed Silicon Valley Bank. A key area of focus has been the level of interest rate risk the bank took when rates were low. A large portfolio of mortgages has fallen into value by billions of dollars thanks to rising interest rates. Asked about the payments to Mr. Herbert's son and brother-in-law, a spokesman said the bank has a policy for transactions with family members and fully disclosures such as transactions each year. He said executive compensation in 2021 reflects the company outperformed industry peers in the S&P 500 from 2016 to 2021 and delivers strong shareholders' returns. So they have been performing quite well in their earnings. So we can see March, June, September, December, their earnings per share has been beat all around. So this company was a very strong company, but unfortunately the rising interest rate hurt a lot of these banks. I feel right now that the reward is much higher than the risk, because it's $12.36, and let's say you buy 100 shares, you're only risking $1,236. But only invest what you can afford to lose. So this stock, let's see, it was once $100 stock. I don't think it'll get to 100 anytime soon. It might get to 40 or even $30. It might. So you're risking $1,200 to possibly 2 to 3x your money. The only thing that I'm worried about is if they do an offering, this can lower the price of the share all the way down to maybe $8 or $5. So that's definitely a risk you're going to have to take with these bank stocks right now. There's just so much volatility. So this stock has been around for quite some time. Let's take a look. We go back 10 years, weekly charts. You can see the stock was around since 2014. So did Silicon Valley Bank. And unfortunately, I lost $6,000. I got in pre-market hoping to scalp. I only bought 150 shares. So at the time, it was around $50 and it got halted around $35. And unfortunately, that money is gone. So that was a risk I took getting into Silicon Valley Bank, not knowing that the bank would get shut down and the stock would be halted. Anything can happen over the weekend or any time. So just be cautious of that and only risk what you can afford to lose. Let's go ahead and read another news article that came out yesterday. So she said that regulators are prepared to take additional steps to protect customer bank deposits if necessary. This is in contrast to her remarks a day earlier to the Senate Appropriations Subcommittee when she said regulators were not looking at blanket protection for banking deposits. Yellen's new comments on Thursday were reflective of Federal Reserve Chair Jerome Powell's comments made on Wednesday, where he indicated that regulators are prepared to take additional action should an individual bank failure threaten to provoke a wider contagion of bank runs. Yellen's statements came amidst the collapse of multiple U.S. regional lenders this month, with investors pushing the stock prices of once highly regarded regional bank stocks to around multi-year lows. She also clarified on Thursday that Treasury officials had not examined the possibility of expanding federal insurance temporarily to all U.S. deposits without congressional approval. So that's definitely good news for regional banks. And also there was a meeting that's disclosed to the public today. So I don't know what that's about, and be cautious of the stock. There's a lot of volume. And if we take a look at some of these options, so you can see to the right that the implied volatility is extremely high, meaning that puts and options, if you're buying, inflated right now. So if we go to next week's expiration days, you see the 12 strike. When we have a lot of volume for the 12 strike for the put side and 1250 for the call side, 2,000, 3,000, and they cost $200. So if you were to buy calls and puts, and if it doesn't move, consolidating for the last week, it's going to lose a lot of value. If you are planning to get into FRC, just think about just holding on to common shares. That way, if the stock just consolidates for a while, you know they won't expire. Let me know in the comments if you're thinking about buying FRC or if you're already holding on to this.